So, hello everyone to our online session about the topic, is the Baltic real estate market about to crash? But before we start, guys, can you please introduce yourself very shortly? So maybe we can start with Igors.
Yeah, hi guys. We're the Bulkestate crowdfunding and group buying platforms. We are established in Estonia. We do have Estonian financial institution license, and we're operating mostly in Latvia, but is in Estonia as well. So we have, as I said, crowdfunding products, loans secured by real estate, and we've got group buying deals, which is more like real estate selling deals, and that's our main difference from the classical crowdfunding platforms. So it's just in few words.
So hello, my name is Tanel Orro. I'm the CEO of Reinvest24. We are a real estate crowdfunding platform from Estonia, Tallinn. We mainly focus on rental real estate, where we give our investors the same benefits and security as owning a part of that real estate. Last month, we just we celebrated our second anniversary, and here's some statistics that we have achieved so far.
Yes, hello, my name is Andis Bīriņš. So I am representing the Ober-Haus Real Estate Advisors, and we are the biggest real estate agency operating in the Baltic states, Latvia, Estonia, and Lithuania.
So let's talk about the coronavirus and especially the impact on the real estate market for our first point. So maybe you can talk a little bit about what is currently happening with the property prices.
I mean, with us, the crisis struck us on March. Obviously, I would say it was a shock. It was a shock because no one knew what's going to happen. No one knew what will happen in the future. If some will be able to sell anything or not. So thanks God, we haven't had any repayments on March or April, so it didn't affect us in this way. But what we have seen is that if you wanted to sell something on those months, if you wanted to sell something hardly, then you had to lower your price for at least 10%. It was in March or April. Right now, it looks like that everything is back on track, and we are hoping that it didn't affect the market so much. So we're seeing right now that the prices for the small flats stayed the same, I would say. But of course, if you are looking for the luxury real estate, luxury apartments, then we've got some issues, because mainly it's because the borders are still closed, and for the luxury real estate, the main buyers are from the east, and the borders are still closed. So the developers are not able to sell some luxury apartments still, but we're hoping after the 15th of June, this will be resolved as well. So that's from our point of view. Yeah, in a few words.
So obviously the COVID and the whole lockdown situation got the whole world by surprise, as well as us in Estonia and in Tallinn. For real estate market, it obviously meant that the sales transactions dropped a lot in April, around 43% compared to last year. And in April, we saw that some kind of recovery, but at the same time, the sale transactions that were still in progress, the buyer sides were kind of waiting to see how the whole COVID situation develops. And obviously the new interested buyers couldn't go even see the properties. So the whole selling process slowed down a lot. If someone wanted to sell, they needed to drop the price. The rental market got hit pretty hard as well, especially the apartments, as the whole tourism sector regarding to the Airbnb apartments, which was a growing trend in Tallinn. The owners didn't want their apartments just to sit around, so they put them on the long-term rental markets, and the supply was overwhelming. But this trend probably is pretty much a short-term thing. As in May, we already see the sales transactions increasing. The prices increased around 3.5% compared to April, and compared to last year, May, the prices actually increased around 9.6%. But it depends a lot on the property type as well. If we talk about residential apartments, then older Soviet Union style apartments that have high utility costs those type, the supply is pretty high, and they're not very desirable. And as the market is very slow, we will expect to see that the prices the sellers will come down on the prices in the very near future. But if we talk about small size modern apartments, then the market is actually pretty active right now, as we were in Reinvest able to sell 3 of our apartments in that period. So yeah, the May recovery is actually pretty surprising currently.
Yeah, the situation in Latvia was pretty similar for sure. And the beginning of the COVID, the market stops. That's definitely. But now we see that demand is pretty high, and probably at the moment let's say the transactions is not so much as we probably expected. We expected by taking care about this demand, but that's probably at the moment. That's why that the buyers were expected that the prices will be much lower by the reason of COVID, but the owners is keeping the prices in plus minus the same level. Yeah, so this is the situation, but at the moment probably a little bit stops the market. That the buyers are expected that the prices should be lower, but yes, they are not, and that's why they are at the moment. We see that they accepted the situation, that the prices is not getting down, and they are still interesting and doing the selling process. For sure, there are some developers who reduce the prices, let's say in the March and the April, but now we don't see the trend that will moving on also so far, and those properties which were really good and so on, they even didn't reduce the price at all. Yeah, so everything is going on. Yeah, so.
Okay, maybe an additional question, Andis. What do you think how this will develop maybe in the next 6 months?
It's hard to say. If you're just looking at the situation at the moment, that it seems that the activity rise day by day. The same information we are receiving from the biggest banks who are operating in Latvia. They also are telling that the interest from the potential client side is plus minus, let's say even 80-90% as it was before the COVID. So that also shows that the market is back in the line, and we are ready to move on. A little bit different situation was about the rent, because it really stops, and the market changes, but by the reason that really we approximately think that it's more than 2,000 apartments what came in the long-term rent from the short-term, from the booking, Airbnb, and so on. Yeah, so and that shows in such a short term that blow off the market, and that's why also the prices, rent prices get down. But now we see that it was, let's say then, and now it's back in the prices are probably, let's say if you are taking about some kind of 500 euros apartment, the price is probably comparing with the previous year is about 50 euros cheaper than it was. Yes, so it's 10% plus minus. And because and those properties which came from the short term, they weren't ready to rent from the long term, and that's why it's didn't impact so hard to the, let's say, long term market. No.
Okay, so Tanel, maybe the next question to you, because I think it's very different, very difficult actually to rent an office or real estate in times of COVID-19. You said it, the borders will be open again at the 15th of June, but how is the situation right now?
Well, yeah, with the office spaces, we can see that the demand is there, but the companies have time to wait on making the decisions, especially if we're talking about long-term contracts like 5 to 10 years. They want to see how everything develops before they take these kind of obligations to themselves. And for many cases, the employers are still working from home, so there is actually there isn't that need to hurry with it. So they can take their time, but we don't see that this trend is going to last for long, as this like 2-month lockdown is not going to change the work culture. People can work from home for some periods, but it's not as efficient as the team coming together. If you have like your team together and making the plans, then you can work from home for some periods, but in the long run, it's not as efficient. And for that reason, we see that the demand is there, their interest is there, but that the companies are just taking their time to go through these decisions, especially if we're talking about 5-year contracts.
But maybe there are some companies who decide because of COVID-19 to make everything online in the future. So you really think that demand will still the same like before?
Well, yeah, I don't see that just 2 months will change that. If the COVID will continue in the autumn, for example, and it's going to last for 6 months or 12 months, then obviously companies need to adapt to that they cannot stop their daily activities just because of that. But currently I would say that just because of this impact, the demand will not go anywhere. And another trend that we're seeing on the market right now is that companies are looking to sell their offices, and they're rather looking to rent. They would want to free some capital that they can use for overcoming the current situation, or developing new technologies that can help them in the future. So this is also the good side, good sign for office rental market.
Yes, agreed.
But it's difficult. It's definitely difficult and slow right now. But as the May was already showing a lot of signs of recovery, and there is more activity day by day, then I think that this will not last long.
Yeah. So gratefully, I don't need an office, so I love it to work online. So, but the next question: what does it mean for investors who invest on your platform, guys?
I mean, for the investors, I would say that's a great opportunity because what we're seeing right now, for example, compared to February, when, for example, with the Bulkestate, we had interest rate of around 12.5%. Then right now we're keeping somewhere around 14-15% per annum. So I would say that's an opportunity to get as much as you can, of course, from the one perspective. From the other perspective, because I would say there is a COVID, there is a crisis, then the banks, it's even harder right now to get a loan from the banks if you're a small developer, for example. If, as I said last year, where was our main opportunity is that, for example, if you want to get the loan from the bank, you'll have to spend 4 months at least just to get an answer, and that answer could be negative. It's not saying that it will be positive from after 4 months. So right now, what you've got, you will spend 4 months, and you will almost 99% will get the negative answer. And because of that, obviously, that's the opportunity for the platforms. We got We've got lots of propositions right now from the developer that they want to get the loan, and from the other side, for the investors, I said that interest rates are rising. It's not only with the Bulkestate. If you can see on the market, it's right now with every platform there is. But of course, again, it's the transparency. Of course, for the investors, you have to look out if there is everything fine with this platform. But I hope that the crisis is almost over, and I hope that the platform that survived this COVID will stay on the market, because I think that's just more than enough bankruptcies or just defaults from lots of platforms that were on the market. So I hope that will stop right now, and that we can finally work quietly and normally without any disasters or whatsoever. So yeah.
Yeah, for Reinvest24, the impact actually has not been that big. I mean, of course, there was quite a big panic at some point, and no one knew what actually is going to happen in the near future. So some investments stopped. But right now we're seeing that everything is starting to go back to normal, and probably another growth wave in the whole P2P industry will arise pretty soon. And this kind of crises are usually offering also a lot of opportunities if you know where to look. Right now we see that even for some bigger developers, it's quite difficult to get financing from the banks, as they're very conservative and things take time. So we're focusing mainly on rental real estate, but currently we're taking in some development projects also from established developers, just to have a better volume of projects. Even more established developers who had access to cheap money from the banks earlier are currently in the situation where they need to look into some alternative solutions, and they're willing to offer quite good interest rates for their investors. So I would say for the platforms and also for the investors, this crisis will bring a lot of good opportunities, and we're looking to utilize them and bring them to our investors.
I would agree in this situation, because we also were started to look we have started to look from the other possibilities how to get money to clients which are interested on buying something, because the banks were not so active in giving the loans, and that's why so we do it more than previous years to searching more opportunities where and how to trying to help to the clients, for searching where they could get the money from their projects. So it's, I think that also there is possibility for you that you could raise the market, your portfolio.
Okay, thanks.
I just wanted to add, Lars, that just thought that for the investors as well, I think the investors become more educated because of this situation, because of other platforms. Investors right now, I think, do know where to look, what to look for, and I think for the platforms, what is coming in place is the transparency. For example, if we are talking about the Bulkestate, I mean, this crisis that we decided that we have to speak with our investors much more. We will introduce the blog. There's KYCs coming in place with the Onfido. So we're pushing this transparency. We're pushing this dialogue with the investors harder, so we understand it, and the investors in need of that. So I think because of those few months, investors understood that there is a risk, that they understood that they have to look, they have to make due diligence at least of some kind themselves. They have to check what the platform is about. So I think that unfortunately, I mean, there will be some losses. I understand that the investor lost some money. Some of the investors lost a lot, but from the other side, I mean, we all got education from that, because as there's some bloggers were writing, that's the first crisis for the P2P market, and so and feed for P2P investors as well. So that's the first crisis for this market from both sides. So I hope everyone will gain from that.
I think also this is a great opportunity for this industry, and also these losses you mentioned. I think it's part of the journey. So it's just a question how much money you will lose. So what you said before, that the interest rates are still rising, and we see on the consumer lending that the interest rates are already decreasing right now after this crisis. Maybe we can talk about the difference between loans, the normal consumer loans, and the real estate investments, and if the real estate loans are more secure in the crisis than other loans or other investments.
Well, yes, I would say of course the consumer loans are more riskier, especially in the times like this, but as well they offer a higher yield. Usually the market, the risks and the yield are correlated with each other. But I would say that the proportion in the real estate investments are a lot better for the investor side. I mean, if the consumer loan or business loan goes bad in times like this, there is not much hope to recover from that. But if a real estate investment goes bad, then if there is a collateral in place, then there is a pretty big chance that you will recover your investment. But you just need to give it some time. So this is the main difference from my side.
Yeah, from our side, I mean, I would say the same. I mean, in my opinion, the real estate loans are very secured because, I mean, at the end, there is a real estate. Obviously, with the Bulkestate, we're signing the loan agreements via the Notary Act, and just this allows us to react very fast if the default will happen. At the end, I mean, if there is a market crisis or is there just a simple default because the loan taker is unable to repay you, at the end there's a real estate. So obviously you can take this real estate and you can sell it. With the consumer loans, as we saw in March and April, is that, I mean, the companies, in Czech Republic, Slovakia, and Kosovo just revoked from the licenses, and there was large losses. And from my side, we're looking how the companies will be able and how the investors will be able to recover those money. For example, if it's lost, and then in my opinion, obviously, if you're looking for the P2P market, the real estate loans are the most secured one, because as I said, at the end there's a property. I mean, you can go there and you can take it and you can sell it. And if, for example, for the most platform, the LTV is the maximum of 70%, but its average for the Bulkestate, for example, it was 54%. And I mean, I don't see the market. I mean, I don't see the collapse as high that we won't be able to repay those 55% with all the interest rates. So, in my opinion, it's quite secured, compared to the consumer loans.
What is the current bank standard in regards to the real estate market in kind of rules and financing?
Okay, yes, for sure there were some changes, and there were different sectors of the clients which they stopped to let's say to give the credits to them, the loans, and then that's why we are telling that we started more actively search for different kind of options, how to help them to finance their properties or even bigger projects. But the banks also were in the situation when they were checking where the market is going on and what's going on in the world by this COVID, and that's why, yes, there was some problems. There was problems for the clients to get the loans. Yeah, so and that also for sure that stops the market from some moment. And and still there are some things that why the clients can't get the loans in such amount as they were expected by taking previous experience before the COVID and so on. So yeah, we saw that there was some problems also from the bank parts that they were not ready to give the money for the clients.
What are the things you watch when you are listing new real estate loans or rental properties on your platforms? Maybe you have some indicators you can share with the community.
I mean, with us, I'm all the time when we're taking on board some of the project. The first question that I'm asking my lawyers is, guys, if he will be defaulted, will be able to get the money back? That's the main, obviously, questions. And of course, there's several things that we're looking at. We do have evaluation expert in place. We do have lawyers, and obviously, I do want to understand, for example, if the evaluation is provided, we're double checking if if the evaluation is correct from our perspective. If, for example, if you will be able to sell this property at that price because there are some mistakes in the valuation and there's subjective views on that. So that's the one. The second one, of course, is due diligence from the lawyers. Obviously, if there are some problems with the company, with the tax debts and all the rest. So again, then there is the Notary Act. Then it's just, I would say, there's another due diligence that is made by the notary. So because we are signing the Notary Act, the loan agreement is a Notary Act. So it's again, the notary is double checking everything that we checked already. So that's the thing that we're looking at. But again, I would say right now, of course, the main thing is what's the price of the property? What's the real price of the property? And will we be able to sell this property at least for that amount that we're giving out and all the interest rates and all the penalties as well? If not, then there's a no-go. We're not going into that, and that's it. And especially with the land plots, especially if the property is not around the main city, then the LTV would be around 49–50%. That's the max. So yeah, I would say, but it didn't change. I would say it didn't change because of the COVID. But what's changed is the valuation. Right now we're double checking it several times, and not just the documents itself, but we're checking it with the market, and we try to understand if, for example, we're not familiar with the area, and we're contacting, for example, the Ober-Haus as well, the Ober-Haus guys, and we're just asking, for example, if this area is just, if he's providing and he's saying that we will be able to sell it, for example, for that price, is it true or is it not? And how fast we'll be able to sell it, and we'll be able to sell it, I don't know, in 3 months' time. And if Ober-Haus is saying that not, we won't be able to do that, then again, that we're lowering the LTV. So that's the main concern right now for us. So yeah.
But this means in the end that you will offer better loans because your evaluation is better and you are more careful. I see it also on other platforms that they are more careful.
I won't say there will be better. I would say there will be the good as before. But I would say that LTV will be lower than if you will see it. Our platform right now, I don't think that we provided 70% for the last few months, if I'm correct. So right now LTV will be lower. So I would say for the land plot, it will be maximum 49% or less. So right now we're a little bit more cautious regarding the LTV and the valuation. I think for the next 3 or 6 months, we will be a little bit more cautious with the LTV, and obviously, we will give 70% of LTV if something will be in the city center and everyone, and Ober-Haus will say, yeah, the guys, this property is just so good that in 3 months' time, we'll be able to sell it just from the 70% of the initial price. So by lowering the LTV right now, so that's the main concern that we have.
Okay, Tal, what about you?
Yeah, so for us, it's a bit different. The collateral value is not enough for us, at least for our rental projects where we actually purchase the property. So we need to have a longer term understanding of where the demand for rental, where the rental demand is coming from, the overall market situation on that region or that area, as well as the liquidity on the market, like if or who's going to be the buyer once we want to exit, like it can be in 5-10 year term. So we really need to know the market overall very well, which is most important for us, as if we might be a little bit too conservative even actually with our property due diligence, but we just don't want to take properties that will cause us problem in like 2-3 years time. You know, this will be, so far our rental payouts have been like pretty much in like perfection, and we don't want to take anything that, you know, we will be later on struggling with, and the investors will have you know, bad feelings about us. And you know, rental income is just one source. We also need to focus on the capital growth aspect. We need to see that there is room for the growth for that certain property, and we need to understand where it's coming from. If there is an opportunity to, you know, do some law work, or there is a possibility to renovate it, or the market in that area is just growing, or we can secure a good rental contract that you know, the cash flow that it has will increase the value of the property overall. So there are a lot of things that we need to look into, but overall understanding of the market is like the fundamentals of those. And yeah, the collateral value is not enough. We need to also understand how this property will generate income for our investors, and where we will find the demand for it, even in the like 5-year perspective.
Hmm. And you offer also development loans, right? So recently you had a new project. Is this because of the crisis, or is it also yeah, one part of your whole offer?
Well, yeah, like I said, we're very conservative with our property, rental properties, and that causes us to, you know, we maybe take 2-3 properties out of 10 on the platform. Yeah, it's around that. So we're actually declining a lot of properties that we're looking into, but at the same time, it's causing a very low volume of projects on the platform that the investors don't like at all. So we're just trying to activate the platform more, offer more opportunities for our investors. So we will be taking time to time some development loans also when we feel that we're very like certain about the developer. For example, the project that we listed on May, the development project in Riga, the developer is very established international group. So yeah, we would like to work with big developers rather than you know, looking for a volume of projects from smaller developers. So the conservative standpoint is still the way that we do it. But yeah, to give more opportunities for our investors and bring more life to the platform, I feel that it's necessary. And right now, I feel that there is opportunity for that, as well as even the bigger developers, established developers. You know, they might turn their ways to look their options in the alternative investment world.
Okay, Andis, what about your indicators to watch?
So yes, we are. Yeah, we are not in investing but we are doing the things that we are say help to the clients, yeah, to buy or sell the properties and so on. And at the moment, for sure that there are more and more we need to give the clients the advice of that, how the market is moving on and so on. And we are really say now we are really see that the activity raise back and back more and more, And the market changes as well. Yes, for sure. There are some clients are understanding that they in future probably will work more from the homes, and that's why they need extra room or extra office in the building as well. But there are for sure there are also some clients which are reducing the costs, and that's why they are selling probably the bigger apartments and going to the smaller, or selling and then they are renting because the renting prices were cheaper and so on. We are now in the very interesting time. So the market is showing the new perspectives, and so that gives us more opportunity us to work, because if the market is active, if the owners are ready to sell something and checking for something else, and if the buyers are also looking and understanding the situation so it's really interesting time, and we are let's say hoping that the activity just rise, and we see that this COVID didn't impact so strong on the market, and that's why we are hoping that the activity will be more and more, and the people is seeing that the crisis at the beginning, they were thinking that it will be more bigger, and the impact will be much bigger from the. We see that it didn't happen, and that's why so we are looking very let's say
optimistic
on that what we saw next.
Okay, yeah, that sounds good. So we are a bit running out of time, so maybe we can thanks for now, but maybe we can add some questions from the investors. I have two for you, and we'll start with the first one. Is for me, a few key figures and comparisons would be exciting. Investment volume of foreigners compared over the years, especially Russians, development of square meter price per average income, and the ownership rate. So maybe you can tell us a bit more about this.
Yeah, the square meter price per average income is actually a very, very interesting and a good indicator to understand if the real estate market is overheated. For example, in 2005, the average salary in Estonia could get you around 0.4 square meter of real estate in Tallinn. That was before the big growth and the crash of 2008. A pretty stable time. Now 2018, 15 years later, an average salary in Estonia could actually get you a 0.8 square meters of real estate in Tallinn. So in that 15 years time, the average salary could actually get you 2 times more. That means that the overall economy in Estonia has been growing faster than the real estate market, and it's a pretty good sign that the market is not overheated.
Yeah, from our side, the question is the foreigners. If we're speaking about the investors to the platforms, especially Russians, then obviously, for example, with the Bulkestate, we do not have Russians or Ukrainians. I think 99.9 are from Europe, and only I would say 5 people are not from Europe, but they're just from Australia or somewhere near. But if we're speaking about the real estate in Riga or in Latvia, obviously the most biggest objects or the properties, for example, are larger than €1 million, then obviously most of them, maybe the colleague from Ober-Haus will correct me, but most of them are owned or bought by the Russians, Ukrainians, from the Kazakhstan, from Georgia. Because especially right now with the situation in Russia, what we're seeing right now, that there's a lot of capital that is running to Europe from Russia because of this COVID, because the way they're handling their situation, and for the rent, for example, we do see right now for the summer, for the holidays in Lithuania and in Latvia, everything is booked already. It's never happened before for the countryside, say tourism or something like that. So because of this situation, the money is running from the east to the west, and obviously because Estonia, Latvia, and Lithuania is just on the way, then this money will be here, and it will stay here, at least some part of it. And what we're seeing that, as I said, the large, the houses in Riga city center, the multi-flat houses are mainly bought by the Russians, and most of the time they are not even looking for the mathematics in there. I think just they want to invest the capital and to keep it here in Europe. So, but as an investor in the platforms, for us at least, we do not have any Russians, Ukrainians, Kazakhstan citizens. So there's, because I mean it's because of the IML, that's because of the banks. We're just keeping out of those investments, and I would say it's forbidden with us. I mean, we have some inquiries. Do they able to invest? And all the time we're saying that no, guys, thank you very much, but no, we don't want to have any issues with the authorities, with the banks, and we'd rather stay with our European investors than.
So maybe one last question. How much price decline is expected in the Baltic states in the short term? For example, in Riga, and could you already observe falling prices? And same question for the rents. It's the last question from an investor.
As I told before, the previous months, the prices on the separate projects fell around 10%, not for all, but that we saw. At the moment, we are not seeing that somebody will, let's say, the trend will move on, and that the other ones will join. But it depends on that, probably how expensive is this money, or how fast they need to sell it. Because for sure, those who are stable, they will keep this price, and we are not expecting that the market will, that the prices from the real estate will falling down for some extra percents and so on. But for sure, there will be some probably projects or some owners which is necessary to get money in very short term. So they probably will reduce the price, and but we are not expecting that we will lose more prices in the short, let's say in the next months or on the shorter period. The same about the rent. The rent actually showed that at the moment, the summer, the July, August, September is those months when the activity in the rental market is rising. The small apartments as well as from the bigger apartments, luxury apartments, when the embassies is changing their stuffs, and also from the high level managers also are say coming here and so on, and that will push up the price definitely. Probably there will be some correction, but if we compare the situation and in the next 3 months, I'm not expecting that the prices will reduce it. I seeing that they only will rise. Yeah.
Okay, thanks. Something to add, Daniel or Igors?
Well, I would say that the property type and the location here will be play a very big factor. Some older type of office buildings in the city, more in the city side, will probably face some vacancy, and they will be hard for them to compete with the more modern office buildings. So they probably will need to go a bit lower with their prices as they are today to stay in competition, or they would need to make some additional investments to make their property more attractive. So yeah, it depends on the location, and some types will get bigger hit, and I see that some don't actually get that much.
Yeah, the commercial sector, yeah, it's probably a little bit different, yeah, about the types, but residential, yeah. So there is from each property, there are their clients, yeah, who are. It's really so also in Latvia that from the, let's say, the old properties, let's say in the neighborhoods, they probably, yeah, the prices will be a little bit cheaper, but and now for sure the clients are checking what they can get from their money, yes, and they are looking to get the new projects, yeah, where the utility is not so high, when they can regulate the heating and so on, and yeah, so definitely the clients now feel stronger, and they are checking what they can get from that money, and looking for better properties. Yeah, that's why from the older ones, probably yes, the impact of the prices will be. Yeah.
So I would say that's it from my side. I think everything, it sounds more optimistic than I thought before. So thank you guys for answering all the questions. And maybe you have some words or some words from each of you to the peer-to-peer community as closing words. That would be great if you have something to add. So
yeah, I would say that real estate is something that is it's something very like high demand, like primary need of humans, and as well as the businesses to function. It's not going to go anywhere, even if there is some kind of correction for short term. In the long term, we will see that the growth will continue, especially if we look at central banks' policies right now. European Central Bank is going to print 750 billion euros in a very short period. This will definitely create some inflation in the market, and that will positively affect the real estate prices if we look at it in long term. So corrections can happen, but it doesn't mean that your investment is defaulted or your money is gone. You just need to wait until the market recovers, and I'm pretty sure that the real estate market will always recover from these kind of corrections.
Yeah, from my side, if you compare 2008, what happened in the Baltics, at least with the real estate, everything just stopped, and it stopped for 2 years at least. I mean, you could give any discount whatsoever, but you were unable to sell anything. So right now, what we had in the March or April, if you wanted to sell something, of course, you were forced to lower your price for say 5-10%. But right now we're in June. And I would say the market recovered already, so we're nowhere near with the crisis that was 10 years. So I would say we're quite all right, and we're fine, and everything is developing, and I don't see any problems or any defaults with the real estate market in the Baltics, at least. So yeah.
Yeah, we are also really hoping that it was just a short impact of the market of real estate, and probably we can't talk about the growing in the closest period, but about we are pretty sure about that the market is stable. Yeah, so that we don't. And we can't compare at the moment with the previous crisis what we get about 2008, because totally different situation, and now the central banks and the governments are ready to help to the economic and so on, and that's why also those who lose the jobs get some kind of money from the government and so on. And that's why the situation is fully different as it was before and in the previous crisis. So we see that this is just a short correction in the market, probably in the prices. And
okay, so thank you. Maybe we can do the same 6 months from now ago in the future to see what you said and what happens. So
sounds good.
Thank you very much.
Yeah. Thank you for the interview.
Thanks, guys.
Bye-bye.
Bye.
Bye.